Let's shift focus to personal finance and to clarify some questions which we actually got from viewers. Harshvardhan Roongta is here to clarify those questions for us. Harsh, we've got a lot of retail investors asking us what really are they getting when they say it's a large cap fund, this is a mid cap fund, this is a small cap fund. There are even confusions between NAV and market cap. So to just get to brass tags, market cap and how should a small investor understand it?
Well, Lata, if I put it in very simple layman retail investor understanding terms, the top 100 listed companies in India would be classified as large cap companies. So if I'm looking at, see broadly we can say all companies which have a market capitalization of 10,000 crores and above, going up to say 2.5 lakh crores, which could be ONGC, Reliance, you have TCS, Coal India. Now these are the top 5 listed entities. And if you come now up to 10,000 crores, all companies in that category, which are roughly about 100 of them, would be classified as large cap funds. Now, if you take a total market capitalization of all listed entities in the country today, it would be about 60 lakh and 80,000 crores. Now, it is interesting to note that these 100 top companies constitute to about 70% of the total market capitalization. So, for an investor's perspective, he needs to understand that if he's investing into a large cap fund, one, he's investing into companies which are very large in nature in terms of their dominance, in terms of a customer base, in terms of capitalization. The mid cap, when you come to a mid cap category definition, I mean, it would be easy to probably for an investor to understand that he's investing into companies with a market capitalization of between 2,500 crores to 10,000 crores. Now, if I have to throw some names so that a person understands what exactly we're talking about, it could be Gillette India is one such company in that category. You would have Berger Paints. So these are companies which are between 2,500 and 10,000 crores. Now, small cap companies by this definition would be all companies which have market capitalization up to 2,500 crores. So Raymond Limited would be about 2,300, 2,400 crores as of present date. So that would also be classified in a small cap. And going down further, you could have SKS Microfinance, which is about a 900 or 1,000 crores market capitalization. So from an investor's perspective, when he is starting to invest, if he's a new investor, it is more advisable that he starts from in a descending order. First, he goes and concentrates his portfolio into a large cap fund so that he's investing into very strong large companies. And he can have moderate exposure to mid cap companies because you have some really nice names in that category as well. And avoid a small cap for sure if he's a beginner, and if he understands market going down the way, then he can probably have small exposures into the small cap fund as well.
Necessarily this cutoff of 10,000 crore or 2,500 crore that you're talking about would be a moving target. When the Sensex shrinks to 14,000, it's a different target. When it is at 20,000, it's a different cutoff.
Absolutely. So basically, instead of thinking of a cutoff, we would say that some companies move into the mid-cap categories the moment, like I mentioned Raymond, which is in the range of about 2,300 to 2,400 crores. The moment it crosses 2,500 crores, probably it would move into the mid-cap category. Okay. And so likewise, if some company just is at the brink or at 10,000 crores, would fall down to say 9,000 some crores, so probably it would come into the mid-cap. So these are broader perspectives. There's no defined line, but going by the understanding, this is generally the methodology to define what is a large cap, mid cap and a small cap.
Fair enough. Harsh.
But again, let's go back and start addressing all the personal finance queries. Sriram Bhagat from Mumbai calls us with his question. Hi Sriram.
Hello ma'am.
Hello, can you tell us your question?
Ma'am, I wanted to know, is it better to buy a small cap fund or it's better to invest in a small cap stock?
Okay, and could you tell us what your current exposure is?
Like I have some exposure in mid cap and large cap stocks via SIP.
Okay, and who would be recommending which stock, small cap stock, if you have to buy?
It would basically be through a broker. Broker might be recommending me.
All right. It's over to you, Harsh.
Well, Rima, it is important for an investor to understand that if he's buying something cheap, the chances of that doubling are no greater than buying something else which is, say, more expensive. Let me use an example. In investment parlance, you always look at the returns. Now, say, suppose you buy into a 10 rupee NAV fund, and if there is a 10% return that the industry has given, a 10 rupee NAV will move to 11 rupees. And if there is a 100 rupee NAV fund, if 10% is the return, that will move to 110. So returns, if it's 10%, it is going to be applicable whether it is a low NAV product or a large NAV product. So in the same parlance, if there is a stock which is say probably 20 rupees in price, and if you think that there is going to be 100% rise, from 20 it will move to 40. And if on the other hand you have another stock which is priced at about 1,000 rupees, and if it also has to double, it will go to 2,000 rupees. So it is not right to think that a 10 rupee will become 11 faster than what a 100 will become 110. That's not the understanding which an investor should have. You should keep in mind that it's a returns that matter onto your base. So base could be anything.
Fair enough, but would you prefer him buy stocks or mid caps, as in a small cap fund? That's also part of his question. Should he go with a fund or should he go with just stocks?
See, whether you're investing directly into stocks or you're going via mutual fund entirely depends on your capability of understanding and tracking the markets. If you are capable of understanding how a particular stock is going to function, you may invest directly into stock markets. And if you're not able to do that, then you will have to rely on the expertise of the fund manager, whose full-time profession is to track the stock market. So you give your money into a fund only if you know that you cannot handle your money directly into stock market.
Fair enough. Thanks a lot, Harsh, and thanks to Sriram Bhagat as well for that question. We will have to take a break on that note, but do remember to join us next week.